Hey there, friends. Happy Thursday. Today's March 30th, 2023. I guess happy March, happy end of March, however we want to do that. This is a weekly market update. I'm glad you could join me. We do have a few extra slides today, so let's go ahead and just jump into this thing pretty quickly in the interest of everyone's time. So when it comes to rates, we're still kind of floating right around the 6.5% range. There hasn't been a lot of change here in the last week or two. You'll also notice these rates. This is the average 30-year FHA jumbo, all that stuff from investopedia.com. I like Freddie Mac and those guys, but they don't tend to put their rates up very fast. So I'm kind of giving you a view of just what the averages are for different companies kind of every week, just so you kind of know what's out there. When we look at the chart and what rates have done, you can see that we've had a good steady climb. Again, green is good. So when it goes up, it means interest rates are coming down. You can see this is around where the California bank, the SVB bank, had issues. We had a good bounce back. So currently we're sitting right in this little gap here. I anticipate it kind of staying the same. This blue line is the 200 moving day average. It's hard to break, and it's especially hard to break, I would think, right now when we're talking about inflation and recession and everything's data driven right now. So hopefully we have just a good stability built in here. Tomorrow we do have some personal consumption numbers. They call it the PCE. There are expectations on what it should be. So just like everything else, everything's built on expectation. The market, if something comes out that's a little bit negative, we might see a drop. But hopefully not. Hopefully we can kind of keep it steady right at 6.5% and just have a little more stability. Is my favorite word. You know me, I'm an accountant. So we talk about inflation a lot, and so I just thought it was interesting to see this New York Times article by Jeff Sommer. So 2% is basically what the Fed is choosing is their target inflation rate. So 2%, where did it come from? Right? It's actually came from the 80s, and Greenspan and Janet Yellen, who's actually still involved with things. And if you want to read more into this, you certainly can. But I believe the idea was that 2% was the target rate, but it was okay to kind of be in fluctuation. It's interesting because right now, if they just have a target rate in mind and they're not playing with the idea that maybe a 4% is still okay, it's just keeping kind of a lid on it and making sure things are flowing. It's going to be interesting to see where the Fed takes this. Right. But just so everyone knows, we have it out there. That's what their aim is. Their aim is 2% inflation every year, and it comes from the 1980s. So good news for realtors and I guess everyone that lives here. It says 2 North Texas cities, but Richardson, Texas is there too at number 12. So 3 North Texas cities are ranked as some of the best cities to live in America. And so the Woodlands, Plano, and Richardson, this is great news for those of us that are in the housing market, right? Because we want people to move here and be happy. So this is further evidence that even though we feel a recession coming on, that there are still going to be people moving to the area, and it'll help us with home sales. Also, when you look at the total vacant land available, this is Dallas Morning News, so I'm assuming it's not biased at all. But look at all the 4 out of the top 5 are here in Texas. Phoenix is the only one that's even touching anything. But in Dallas-Fort Worth, we have a massive amount of land. So it's really nice because as we get all these people moving here, there is a lot of room for builders to be building. And, I'm looking for every positive we can find lately. I like the way the rates have gone here the last couple of weeks. But we all can keep some positive things in mind. Let's go ahead and stop the slides. So like I said, I like to keep these short. I will be around this weekend. Me and my team will, if you guys have any needs. Hopefully you're going to enjoy the end of March and your weekend, and reach out if you need anything. Thanks for joining. I appreciate it. We'll see you next week.